Three financial metrics you should be looking at before you even hire a CFO would be your cash flow, your profit and loss, and your balance sheet. The most common one and the one most people know about is your profit and loss statement. And that is super, super important. It's also the easiest to read. So if you're going to look at anything on a regular basis, definitely be the P&L. But they all work together. For example, the P&L shows you your revenue minus your expenses and then your net income at the bottom. But what the P&L doesn't show you, it doesn't show you the money that you're spending to pay down your debt. So I get a lot of people that come to me and they look at their P&L, they see they have a positive net income of say $100,000 and they wonder why that isn't in their bank account. Then we move to the balance sheet and I show them that they have been paying off these loans. Payments for the loans do not appear on the P&L, so they're missing that component of it. Additionally, you're paying off these loans with cash. So the cash flow report is also super necessary because it shows you where you start cash-wise and you end cash-wise during a certain period of time. So they all work together to make sure you have a really clear picture about what your profitability is, what your assets and liabilities are, and also what your cash position is. When I look at these reports, first of all, one of the main things I look at is the cash position, the starting cash position and the ending cash position. This should always be increasing. You should always have a higher amount of cash when you're ending the month versus beginning of the month. If it's consistently less, then you're really bleeding cash. But on the profit and loss statement, I'm looking to see if the company is profitable just with their regular revenue and expenses. So I do look at that net income line to see if they are making money. And additionally, when I look at the balance sheet, I'm looking to see if this company is highly leveraged, which means that they basically have so much debt that any of their revenue or any of their net income, all it is doing is servicing that debt. So they're not even walking with any money because they're servicing that debt because the debt has such a high need. What I advise to be consistent would be to do your books at least once a week and look at the P&L during that time at least once a week. The balance sheet and the cash flow you could probably look at once a month, but definitely profit and loss statement once a week to make sure nothing's gone off the rails. If this sounds like you, if you feel lost with the reporting or even how to read it, because sometimes the balance sheet and the cash flow report can be difficult to read, reach out to us. Check out our website and fill out an interest form, and we will get back to you within 24 business hours.